Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1034A, and today's date is July 28th, 2016, and the title of the episode is Earnings Down, Housing Declining, Retail Contracting, GDP Revised Lower. This is the collapsing economy. Let's get into the economic collapse financial news. Now, as we can see, the market is pretty much flat today. It hasn't really gone anywhere. Gold was pushed up once again. We see that gold is making gains. We're at 1340 or so. And we can see as time goes on, we're going to see gold rise even more. Now, that doesn't mean the central bankers aren't going to come out and suppress gold. Of course they are. But we're going to see gold get very, very close to 1400, most likely in the next couple of weeks. And as we go forward, we're going to see gold move up even more because it's becoming more and more difficult for the central bankers to suppress gold and silver. And eventually what's going to happen is they will lose control. But when we look at the economy, we see that almost every single indicator that we look at, it is contracting. And when we put everything together and we step back and we take a look at the big picture, we see that this economy, there is no recovery. It's a fact. They can talk all they want. They can say, yes, recovery, believe me. Obama can come out there and tell you we are. The Fed can continually say, it looks strong, but we're not going to do anything. The stock market can continually rise because the stock market is not the indicator of how the economy is doing. That's the manipulated indicator that the government uses to convince you that the economy is doing well. And right now we see initial jobless claims. They've inched up a little bit, climbed to about 14,000 to 266,000. And what they're doing right now is they're manipulating most of the statistics to keep this illusion alive. Now think about it. We have stores laying off individuals, and I know the part-time people, if they're working a certain number of hours, each state varies, they don't count those people as being laid off. I mean, if they have the job, they're counted as a full-time job. But when they're laid off, they're not counted. And we're seeing many corporations laying off thousands upon thousands of people. But the initial jobless claims is its lowest we've ever seen. I mean, it doesn't even make sense. And you also have to remember back in 2013, the U.S. government decided to get rid of the department that looks at layoffs because of budget constraints. Now, we see on the corporate media, they're trying to make the argument that because of Sports Authority, the bankruptcy, and total liquidation, this might spell big trouble for other retailers, saying that they're concerned about the way they have been operating and this might spread. Now, really what they're trying to say is that the economy is falling apart. People aren't spending because we've been seeing stores like Quicksilver, American Apparel. We've been seeing Aeropostale, PacSun, Teen Stalwarts. I mean, they all filed for bankruptcy. And many others have closed many, many stores. So what's really happening here is that the economy is contracting. People, as they lose their jobs, they can't go out and spend. But of course, what they need to do at this point is they need to spin everything to try to explain this away. They never mention the economy. They never mention that, wow, there's so many people unemployed, they just can't go and buy retail. And they'll never do it. We see corporate earnings. Well, they're declining also. Shell's profits, they just tanked by 7%. Ford, guess what? It's not going well for the auto industry. Actually, what is happening right now is that we're seeing that auto inventories are now at 5-year highs. And the inventory to sales ratio are back to levels seen during the last recession. And coming from the chief financial officer, Bob Shanks from Ford, he is saying that he actually predicts a contraction in 2017. He says we don't see growth, at least in the near term. We don't think the U.S. is coming down from what we expected. Already, they're telling us that there is no growth ahead. Caterpillar is saying the same thing. IBM is saying the same thing. The auto industry, they understand what's really happening. Now, the government, on the other hand, who takes the information and manipulates it to convince you that everything is fine, they have a different story. But when you look at the actual corporations, especially retail, you can see their sales numbers. They don't match up what the government is trying to tell us. We see that the real estate market, well, things are rapidly coming to an end. We're seeing Manhattan, Miami, San Francisco, Silicon Valley, Southern California, Texas. Sales are declining. Actually, what we're seeing there is that cash sales from the hedge funds, investment companies, foreign investors, affluent buyers, it has fallen by 32% of total home sales in April, down 2.8 percentage points from a year ago. Now, according to a new report from CoreLogic, the first 4 months cash sales have dropped to 34%. This is the lowest since 2008. In Florida, the number one destination for foreign home buyers, cash sales have accounted for 46% of the sales. And in New York, they're at 44%. They are now declining. What does this tell us? This tells us the housing bubble is popping. So what do we see? Well, we see the cash sales are declining. Now, they're the ones who propped up the entire market. The American people are sitting on the sideline. Actually, the home ownership rate right now is at its lowest since 1965. It has tumbled from 63.5% to 62.9%. I mean, you have to go back. This is 50 years you have to go back. So if the American person is not purchasing a home and cash sales are declining now, and we're already seeing it in the markets I just mentioned, the housing bubble, well, that's starting to pop. And we're seeing this for the past 3 consecutive quarters. We're starting to see prices decline. We're seeing rent also sliding. It reached a peak and now it is declining. So we have rent declining, home prices declining, sales declining, cash buyers declining. This is happening all at the same time. Now, of course, everyone says, well, wait a minute. I still see in my area rent is still very high. Some other people say, well, rent is declining. Actually, in my area, when I had to move, I was able to find deals. And actually, when I looked on the realtor websites, you can see that rent was continually dropping. And actually, the place that I chose came down twice. I went to look at it, and actually, I got it even cheaper. Now, is every area going to see this at the same time? Absolutely not. But will it spread? Yes, it will. Just like we're seeing the real estate prices, they start in the outlying areas outside those cities that they propped up, and it starts to spread like wildfire. And I have more and more people now writing in saying, yes, I am experiencing this now. I doubted you in the beginning, but it's finally hit my area, and it will spread to every single area. And this is what we've been looking at. This is everything that we've been studying. So you can get prepared for what is coming. Listen, we were all blindsided in 2008. There were some people that were not. We believed the corporate media. Some people did not believe the corporate media. People believed the Fed, some did not. But the majority of the people actually believed. This time around, we don't believe. We're doing the research on our own. We're looking at the economic indicators. We've been watching everything every single day to make sure that the U.S. government, the Federal Reserve, the corporate media doesn't trick us into thinking that everything is fine. And we're seeing more and more of these economic indicators that's showing us that things are rapidly declining. I mean, look at the trade deficit. It has widened further. Both exports and imports rose for the month, but the gap widened more than any economist could even estimate. So right now, we are importing more than we're exporting. And the gap widened to $63.3 billion. Now, when we look at all of this, manufacturing, well, that has entered a depression stage at this point. The Baltic Dry Index now has dropped another 14 points to 665. The gains that the Baltic Dry Index made, well, they're all being lost. It's dropping right now to show us that we're coming into a period where our manufacturing is kind of dead in the water at this point. Now, we know that the Atlanta Fed, the New York Fed, they have their models to estimate how the economy is doing. They do this with GDP. And they always start out very, very high to let us know that the economy is doing well. And then as we go along, they say, well, maybe it's not going to be 3%. Maybe it'll be 2.5. Maybe it'll be 2.4. Well, we see the Atlanta Fed is out there. They started out very high. They thought it was going to be 2.4% for the second quarter. Now we're down to 1.8. And what we're seeing right now is all this manipulation. Everything that the U.S. government has done. It's getting more and more difficult to explain away why all these things are happening. Now, of course, they're going to continually manipulate. We know this is an election year, and they want things to look really good. And also, Obama came out in the beginning of the year telling us that, anyone that doesn't believe that the economy is doing well, they're peddling fiction. How would it look if the economy just fell apart? Can they just let it fall apart? Yeah, I guess they could. But, of course, what they're going to do is they're going to blame someone else, another group, another country. They will never take the blame for what has just happened, because how can they take the blame after they told us that everything was fine? I mean, think about it. Back in 2008, when everything crashed, even though they told us they weren't forecasting any type of crash in the year that the entire economy crashed, they blamed the people for the crash. Well, you took out that mortgage. You should have never taken out that mortgage. But again, the qualifications for taking out the mortgage were lowered by the U.S. government, central bankers, and the banks. They're the ones who make the final determination on who should get a loan. Now, of course, when the system starts breaking apart, what they do, and we're seeing it now, is they reduce the qualifications for people. And they say, okay, listen, we'll go to subprime, we'll go to 0% interest rate, we'll go to no money down. We don't care, just pump up the bubble. And this is what we've been seeing ever since 2008. And we're repeating everything that we went through. And here we are today. But it's much worse. Because half of America, I would say almost half, lost their wealth in 2008. Today, those people never gained it back. Many people have been losing jobs or sitting on the sidelines. They're losing their house right now. And this time around, this is not a people-driven economy. It's a central bank-driven economy, which means when the system breaks apart, it's going to be very hard on the people because there will be no jobs. Credit will freeze up. People who've been riding the stock market thinking that this is going to last forever, well, it's not going to last forever, and everyone's going to be in for a rude awakening. And this is where the problem sets in. This is where things really fall apart. And this is why we see the countries preparing for what is coming. A total collapse of the system. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.